Hi guys, welcome back.
So, first of all, thank you very much for your wishes and I wish you a happy new year too. But I guess the market is not really welcoming us after the new year. It is quite volatile these few days after the new year. Even though the S&P 500 did not make a huge dip, you can see a lot of the growth stocks, the tech stocks, and the Chinese stocks have been making huge dip recently. So I want to share my views on what's happening. And in this situation, what should we do? What should we buy? And what should we hold on to? Now, first of all, the S&P 500 is still running quite healthy. Even though for the 2 days it dipped below the 5MA, it did bounce back up quite strong. For me, I was kind of waiting for this support and range to start adding again, but the whole time it never got there. It did not even break the support of this day yet. So you can see that the market is still running healthy, but what's changed is the sectors. I think a few times I have reminded to pay attention to the Dow Jones and Russell 2000 rather than the Nasdaq, the previous hot stocks, because Nasdaq was running up strongly for the past few months because of the big techs, mainly like Apple, Google, Nvidia, AMD and so on, right? But now these stocks have got to be a kind of overbought level. At some point, I would be a little bit more cautious. So I suggest to pay more attention to the Russell 2000 that have been only consolidating on the side for almost 1 year and waiting to break out to make all-time high anytime. And also the Dow Jones, it's even a little bit better than the Russell 2000. Observing from the movement for the past 1 to 2 months, it does seem like Dow Jones is going to run even stronger than the Russell 2000. So it is really not a bad idea to pay attention to the sectors in the Dow Jones industry now. And I guess at the same time, it is also a very good hedge or balance against your portfolio, which most of us would hold a lot of tech stocks. So paying more attention to the stocks included in the Dow Jones, it's a good hedge against our portfolio, I think. Because even though the S&P and the Nasdaq had been running so strong, Dow Jones is quite behind compared to the other two index. So for the short term, I really think it's a smart way to look at the stocks inside the Dow Jones that have not gone up yet. Because even though Apple and Microsoft, they are the important stocks inside the Dow Jones, I do think that it's not going to be them to pull up the index from now on. I would lean more towards to something that have not gone up and have been consolidating on the side for the past 1 year. For example, Boeing has been consolidating for more than a year on the side, still have not recovered from the COVID crash. Another example is Disney. It has been consolidating on the side and a few times it tried to break out but fell because of the COVID coming back, the cases increase. But right now, I think we can see that it has formed a double bottom and looking like it wants to make a reversal under the circumstance that recently we have an explosion of COVID cases again. So I think you can see the recovery stocks have fully priced in the worst case scenario for COVID and is almost immune to the news from here on. And because some experts share the views on how Omicron might be able to finally push COVID behind us and we can have a full recovery, then in this case, it would make more sense if the Dow Jones start to climb now to catch up the other two indexes that have been growing quite strong, right? So pay attention to the stocks inside the Dow Jones that have not gone up yet. And I actually have another example, which is Salesforce, ticker symbol CRM. I don't see a lot of people asking for this one. It was included in the Dow Jones only recently. It was last year during the summer. This news got it a big breakout, but after that, it was mainly consolidating on the side, not doing much for a year and a half. So I think if it can consolidate and form a good bottom here, we might expect it to rally later. And I do see these stocks inside the Dow Jones, they might have a chance to outperform the popular stocks like the current popular stock like Nvidia, AMD, or Apple, and so on. Especially right now, the tech stocks is doing a little bit of a correction, a long overdue correction. So it might drive Salesforce down further. And if it gets pulled down with the rest of the big techs, it might create a golden dip for long-term investors. Since it looks like it's breaking an important support right now, which is the 250 MA at 247. So if you are patient enough, I think you might be able to wait for a golden dip. So I think for Salesforce, the golden dip, if it can happen, I would target the range of 237 and 223. This range, I would consider this a golden dip opportunity because I think the market has been punishing Salesforce for acquiring the company Slack. Maybe they think they bought it with overprice. Maybe they doubt that the two companies can synchronize. But I think the punishment has been long enough and Salesforce has not increased for 1.5 years, so maybe it's time to revisit. So I suggest to look at the stocks included in the Dow Jones because I am bullish on Dow Jones and Russell 2000 for the medium term. Every time there is news about COVID or new virus, the market will freak out and think it's another COVID crash for the recovery stocks, but every time they survive. So I think there is a chance the big dogs, the big institutions have been accumulating their shares for the recovery stocks for almost 2 years. So I think we can pay attention to that, especially Disney. Every time the market dips a little bit, people worry that it's gonna be the end of the bull market and it's gonna be a market crash. But my view is that I don't think the market would do a big medium-term correction for more than 10 or 20% until the COVID disappear. And right now we are not seeing things back to normal within the next 1 or 2 months, maybe somewhere in this year, during 2022. Because as long as we still have COVID, the government, the Fed, would still have reason to save the market, to continue the QE. So I don't think the crash would come when COVID is still here. That's why the whole time I said the music hasn't stopped yet. So enjoy it while it lasts. Now, that is for the medium term. For the long term, I am still bullish on the Chinese stocks. I think this would give more safety zone for the market situation now. I think the big institutions would be also accumulating shares for a lot of the Chinese stocks and the ETF during these few months because it's really at the bottom for the long term, even though the short term has a lot of uncertainties and volatility. In the long term, HSI is at a very, very strong support. You can see this red trend line. Again, this trend line has never failed to support the index for the past 30 years. So right now it is still a golden opportunity. But the only thing is that I'm not sure about the super short term, which is the next few days, the next few weeks, because it can still do a last shake. That I am not 100% sure. If you look at the weekly chart and you can look at this blue trend line, and we can see that it still has a little bit room. So don't be surprised if it can do a last shake up and touch this, because we got almost there 2 weeks ago, but not touching it exactly. So if it does the last shake, I think it would likely touch this and then bounce back off. And if this is the case, then within the next following days, it can make a quick dip to the level of around 223. So this is the maximum I see it can do if it really does a last shake up. And then after that, I think it would likely make a strong bounce back up. And then at some point, it might make another double bottom, make a W shape. And we might have a bull run later. Maybe the second half of the year. Maybe somewhere around Q3, Q4. Even though we have been correcting a lot, there is still a lot of the bad news the media can use to scare people. Like the real estate sector might be the biggest time bomb right now. more and more default. I don't know exactly, but this dip, I am thinking right now that might be the time when US market does a medium-term correction of more than 10 to 20%. So I see Chinese stocks would dip with the US market. And after that, it would have a stronger run up. So I think at this point, for the short to medium term, I still think the US stocks would have more opportunities. But for the long term, I think the Chinese stocks might be more safe. And stretching it to a longer period, I think it would outperform. So that's how I see the trends going forward and the prediction for the medium to long term. Now let's look at the individual stocks. I cannot not mention EH today because it is the brightest star in my portfolio today. I don't know what is the reason, because it's staying quite strong with the whole growth stock sector going down, right? And buying volume, you can see it's quite an increase of the day. After being quiet for a few months, we finally have good volume, so it's a good sign. But I'm also sorry to tell you that right now we are at the resistance level. So we need to see in the next 1 to 3 days if it can hold this level. For now, I do see EH moving in a range of consolidation between the 13.9 to 17. If it gets stronger, it might be able to slowly close the gap. But for now, I see it moving within this range to mainly do consolidation and form a good bottom before we break out, right? Like I said, I'm holding EH because I cannot try to time EH movement because I don't know when they will get the certificate. They can get it tomorrow, which I doubt it. I think it would most likely get the certificate in Q2, but no one has the crystal ball, so all I can do right now is to hold it, and I'm too afraid to sell it and wake up having the news saying they got the certificate. So that's why I'm holding EH. KWEB and FXI, this ETF dropped a lot today, which is very unlikely because after the huge volume on last Thursday, it's unlikely to come back down so soon. And today it was because a lot of the big tech Chinese stocks were dropping. Like for example, JD dropped 6%, PDD dropped 11%, and Bilibili dropped 9%. Why are these dropping? Particularly, it was because of Tencent, I think, because Tencent 2 weeks ago announced that they were reducing a large chunk of shares of JD, being the biggest shareholder of JD, right? So that news has scared a lot of people because Tencent is at the same time holding many tech companies as their early investors. That news had caused JD to drop quite a bit 2 weeks ago already, but today that news had caused JD to drop quite substantially already, and at the same time triggered the fear sell-off from a lot of the other stocks that Tencent is holding, like Bilibili, PDD, many of these Chinese stocks. Tencent is one of the biggest shareholders. So if they announce they would be selling off again, the selling pressure is quite big. And today we saw the news that Tencent announced to be reducing their holdings in C Limited, ticker symbol SE. It is a very good company, very good stock to own, but even such company that's owned by so many large institutions of Wall Street still cannot survive the news of Tencent reducing their shares. This is how powerful Tencent is as the main shareholders for many companies. And this news had caused C Limited to drop 11%. What a huge dip, even though they're only reducing 2.6% of their total shares. Just that it can cause 11% drop. So it is no wonder a lot of the big techs have dropped quite a lot today. So naturally, investors would relate or ask themselves whether Tencent is going to sell out more of their other stocks. Like for example, Pinduoduo, PDD, Bilibili, or even our NEO. Tencent is the biggest shareholder, and it's still a time bomb if they continue this trend of selling, right? Well, this would be extremely hard to predict. I did not see this coming. I mean, I cannot time when Tencent is gonna sell out something. So the only thing I can do is to draw out resistance and support. For me today, I bought a little bit of short and long call for PDD because it has reached my next support of 49. If the 49 level doesn't hold, I would add more around 45 to be the next support, and also the bottom of this trend line. I think it would likely hold at this level. So if PDD can drop to 45 level, I think it's more opportunity than risk, and I would be happy to grab more. Surprisingly, BABA is the strongest stock out of all the Chinese stocks recently. You can see the very interesting movement is that BABA had actually made the lowest low on this day, December 3rd, with the huge delisting news of Didi. Everything fell all together, right? But BABA did not make a newer low, even though most of the other Chinese stocks have made lower lows. And considering BABA to be one of the weakest one ever since the correction of Chinese stocks, it does give us some hope here. This is why my dip buying on last Wednesday at 111 is still making good profit right now. Why is it interesting is that during this few weeks, not only Chinese stocks, S&P is moving like this, super volatile, and most of the growth stocks were moving like this. But instead, BABA is only moving on the side, consolidating in a very, very small range. So it does seem like someone is controlling the price movement. And you can think about who is selling and who is buying, right? And to me, I don't think it's the retail investors buying the dip to make it so stabilized recently. I do think it's the bigger institutions buying the dip to hold it so well and consolidate in such a small range. So this is very interesting, something worth paying attention to. So I'll update you also what I did recent days. You know that last Wednesday I was taking advantage of the huge dip and bought BABA and JD Call, also opened a position on Rivian and Humble. And then I also bought CWEB and YINN. And after that, right away it has gone up quite strongly. I drew out the resistance of CWEB. You can see that the second resistance was 13.2. I said I would lock in profit for part of the shares. You can see on this day, CWEB did in fact get to 13.2 and then make a big dip after that, which is bigger than I expected, right? So last week I also reminded it's time to take some profit. It was a fun day, but it's growing too much in a rush. Like my JD call option got double in a day, so I suggested to take profit. And for Humble, yesterday I also said I would take profit for half of the shares. It's already up around 40% in 2 days, so it's a bit too fast. So you can see that for the past few days, last week and yesterday, I haven't been buying and only taking profit. And today I said KWEB has reached a short-term support, while the Yang, which is the ETF to short the Chinese stocks, have reached a resistance. So it's a short-term support. So I suggested to buy the dip but set a stop loss with the lowest of today. And you can see that for Yang, YANG, the China Bear Triple. You open the 1 hour chart. It has run up quite fast for the past 2-3 days. But right now the resistance is around 21.9, which is the opening of this day with the biggest volume recently. So I think it's not much of a chance it can push through in a short time anyways. So I think this is a short-term resistance, meaning a short-term support for the Chinese stocks. So I suggested if you want to buy the dip, you can set up some tight stop loss in case the HSI really does a shake, right? And reach the level I was expecting, like 223. So you can set a stop loss in case it makes a last shake. Other than the PDD, I also bought Pinterest and Roblox. Ticker symbol RBLX. I bought Roblox because I think the metaverse is one of the trends that it's kind of like a must get in for the year of 2022, and it's not too late yet. I don't think this sector would be a huge profit-making machine anytime in the recent 1 to 2 years, but I do think that the capital might still hype it up, so there might be some opportunity for the medium term. And I set a target before to buy between 90 to 93, and today it had reached this level, so I bought a long-term call option for that. I don't know if it has bottomed yet, but I do think this range it's worth a shot. Pinterest, I analyzed it a long time ago, maybe a few months ago. Back then in early November, my Discord member asked if it's a good time to enter Pinterest. At that time, Pinterest was at 45. I said wait for 43 and 38. I would get in myself at 38, right? And seems like 38 support is broken, and now we're at 32. I think it has reach a short-term support. At least it's one of my target before. Pinterest is a software that my team in the company use a lot on an everyday basis. We all find it quite useful. I think it has a very specific and loyal target group. I would set stop loss slightly below 32 support. And again, right now, all the dip we grab, I would think it's better to have stop loss because the market is still quite uncertain about the growth stocks. There is, you can see a big sell-off happening and no one knows where is the bottom, right? And even for our baby Neo, it's the same thing. Right now we have the support at 31.4. Today we have slightly dipped below it and bounced back up, but barely. And if the support of 30.5 is also broken, then it might turn downtrend again. So just watch out for that. And it's better to have stop loss ready. Now that's it for today, and if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.